Welcome to the Anti-Money Laundering and Counter-Terrorism Financing course for Australia.
The contents of this course includes learning objectives, an overview of money laundering and terrorism financing, an overview of the main stages in the money laundering process, including placement, layering and integration techniques, a summary of the main parts of the AML-CTF Act 2006, Part A, Program Governance, Part B, the Customer Identification Program and Reporting Obligations, red flags, potential consequences of non-compliance, and a learning assessment. In simple terms, money laundering is the process that criminals go through to disguise the origin of illegally obtained money. There are 3 stages in the money laundering process: placement, layering, and integration. Terrorism financing is generally defined as the act of providing financial support to terrorists or terrorist organizations to enable terrorist acts to be carried out. Terrorism financing does not necessarily involve illegal funds. In fact, it often is carried out using legitimately obtained income, and in many cases involves relatively small sums of money. There are many countries that are recognized as tax haven countries, which have typically offered anonymity to criminals and legitimate clients alike. Many countries have well-developed offshore banking sectors with mature anti-money laundering regulations, which are less attractive to money launderers due to the scrutiny that their activity may attract. Other countries, which either have no anti-money laundering regulations or have immature regimes, are more popular with money launderers, tax evaders, fraudsters, and corrupt officials. Some offshore centers combine loose anti-money laundering procedures with strict bank secrecy rules. Criminals can easily maintain and transfer funds from banks in these centers because details of client activities are generally denied to third parties, including most law enforcement agencies.